And then I looked at Bitcoin and ETH and they looked identical, except ETH was earlier. Then I started putting the price of ETH at 5 million wallets and Bitcoin at 5 million wallets. It was exactly the same price and the price structure was the same. So this is the fastest adoption of any technology in all recorded history. And ETH is the front runner right now. Now, it doesn't mean it always will be, but right now it's clearly winning network effects. And therefore, I think the network is undervalued. ETH was actually gaining faster adoption than Bitcoin. And we know it by the number of developers working on it, the number of applications working on it, and the number of wallet addresses, the rate of increase. So it's growing at about twice the speed of Bitcoin right now. So ETH's growing at about 100% a year, and Bitcoin's growing about 50% a year. The entire digital asset space growing about 113% a year, which is twice the speed that the internet grew at.
But I don't believe that it's all going to end up on the Bitcoin blockchain, and it doesn't necessarily have to, even if it's suboptimal. I think it's a much larger space, and within that, Ethereum probably plays a large role.
And then I looked at Bitcoin and ETH and they looked identical, except ETH was earlier. Then I started putting the price of ETH at 5 million wallets and Bitcoin at 5 million wallets. It was exactly the same price and the price structure was the same. So then I started realizing, well, maybe stocks of flow is actually just an extension of Metcalfe's law, and all of this is network effects. So I started then trying to understand more about Metcalfe's law, how it affected the mobile phone industry, the internet, and then stuff like Amazon, Facebook, Google, and all of that. And so that was the huge breakthrough for me, and that ETH was actually gaining faster adoption than Bitcoin. And we know it by the number of developers working on it, the number of applications working on it, and the number of wallet addresses, the rate of increase. So it's growing at about twice the speed of Bitcoin right now. So ETH's growing at about 100% a year, and Bitcoin's growing about 50% a year. The entire digital asset space growing about 113% a year, which is twice the speed that the internet grew at. So this is the fastest adoption of any technology in all recorded history. And ETH is the front runner right now. Now, it doesn't mean it always will be, but right now it's clearly winning network effects. And therefore, I think the network is undervalued. You know, if you say, if you could only own one asset over the next 12 months, what would it be? It'd be Ethereum, because it's the least risky with the highest rewards. Because of the massive changes happening, I understand there's risk that may not go through in the way, the format people think, and there's some other, questions being asked, and that's all fine and good. But I think probability is that you're going to end up with a reduced supply, massively increasing network usage, interconnectedness of that network, and then you're going to go to proof of stake as well, which gets rid of the green argument. I think you're going to see institutional investment in the space. So I think ETH is the single bet that there is right now, but it feels like we're in for the double pump, the 2013 repeat.
Yeah, I just want to reframe some of this. I think talking about DeFi is missing the point. It's like focusing on a micro aspect of what is the start of the digital renaissance age. Everything is going to change. It's not just how we bank, how we transfer money, how we store value. We're moving into a truly digital world of which everything around us will change. People need to start getting familiar with things like the metaverse to understand where this is all going. And across that, once you start creating a digital world where, everything from education to where people socialize is digital, where people store value, transfer value, create opportunity is all digital. That whole world is a very large world of which we now have this pristine collateral base layer, which is Bitcoin, which is phenomenal, right? That gives it the stability and the anchor point from which to build. But I don't believe that it's all going to end up on the Bitcoin blockchain, and it doesn't necessarily have to, even if it's suboptimal. I think it's a much larger space, and there will be a interoperability amongst protocols to create this digital renaissance age. And within that, Ethereum probably plays a large role. And I see it differently than I see the Bitcoin ecosystem currently. Again, that may change. We don't know where this is all going. It's organic. It's driven by millions of people. It's not driven by one person saying we're going there. So where it goes is where it goes. But I think probabilistically speaking, it is a multi-protocol, interoperable world with Bitcoin at the center of it.
But I think they're going to be a huge part of the global business model going forwards when businesses start coalescing around communities and how communities can drive their own value system by using tokens and network effects to increase the size of it. People go out the risk curve, and that's normal, right? It happens in all financial markets. So I figured that was going to happen because that's how people do things. And at the same time, I'd started looking at the chart of Ethereum and thought, this is a really great chart. So I started writing about it, and particularly the ETH Bitcoin cross. So I started writing about it a bit. And then I started digging into, okay, how do you value Bitcoin and Ethereum? So we've had the stock to flow model, but really what it was to me was also a network. And you use something called Metcalfe's law to value a network, which is basically a network has value proportionate to the number of people on the network and the number of interconnections they have with each other. So I could see that in Bitcoin, and you could pretty much prove it out by putting like number of active wallet addresses and the price of Bitcoin on a chart, and you basically get a very high correlated answer. And I could see people attacking anybody who talked about Ethereum or other tokens online. So I'm like, I need to find out how you price Ethereum, because I have a feeling it's exactly the same as Bitcoin. And what was interesting is I used the same mechanism and it's priced exactly the same way. But what was more surprising is the adoption of Ethereum was much faster than that of Bitcoin at the same stage. So I'm like, wow. And then you start realizing the number of things being built in it, the applications, the number of developers involved, and the speed of the increase of the number of users. So there's a lot of interconnections, plus a lot of users. That was going to become very valuable. I talked a long time about the tokenization of the world, so I kind of got the whole concept. But Bitcoin was the pure play for the economic situation we were in, right? Made the total sense, right? Easiest narrative, first port of call, lowest down the risk curve. So that made sense. But as the rally started broadening out, we know that over time people move further out the risk curve. The next one out the risk curve is Ethereum, and then you can go all the way out to some brand new protocol that nobody knows whether it's going to work or not. Or,
The point being is to frame it in terms of portfolio effects, particularly for family offices, is not that relevant. What you're deciding in a family office is, what does the world look like in the future, and what am I trying to transfer across to the next generation? This is the future. That's how I started this whole conversation today. It is the future of the entire financial system. It's the future of the digital world. It is the future of how we're going to transact in that world, how we're going to create opportunity in that world. And it's best represented currently by Bitcoin. So to not have a significant proportion of your portfolio and a significant proportion of your mind share is really missing the big picture. And I talked about this recently. We've basically just discovered America. There's a whole new world. And you can be the European saying, well, everything's going to remain the same. But it didn't. And it won't. And so that is what you have to do. You have to embrace this new world. So you need to be braver than you think you do. You need to ignore things like volatility, because volatility is just a function of return. And so you have to embrace the volatility and understand what it means.